Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it's Tuesday. It's the 1st of August, and my name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. Just going to go ahead and bring up our disclaimers. I'll start off with the high-risk investment warning. I'm going to keep this on screen for a few moments, and then we'll put on the commentaries disclaimer. All right, here's the commentaries disclaimer. Good morning, Kim. Welcome, and thank you very much for joining. Appreciate it as always. All right, our reference is MarketScope 2.0 and TradingView.com. Let's just bring up TradingView for a moment. Something that we did last week. Let's just bring up the Thomson Reuters Jeffries CRB index. Okay, let's go to the monthly. And what we can do is just put in the commodity currencies. We'll do this very quickly. Just put in the Aussie. We'll put in the Kiwi. And we'll put in the loonie underneath. Just for the loonie, what we're going to do, because the loonie puts the US dollar as the base, whereas the previous two, the New Zealand and the Aussie, are the base currencies. We just want to invert this one, so we're just going to go 1 divided by. Okay, and put that on a new pane. All right. It doesn't quite look right. Let me just do that again. Okay, we're good, yeah. All right, so just to show you what I'm looking at, the commodity cycle. We've got a movement up here. Let's just make this a richer red and make it a solid line. And you've got to move up here in the Aussie, right? You've got to move up here in the Kiwi. You've got to move up here in the loonie. Movement down here. So you can see this, the cycle here. So far it's pretty tight. Okay, and we could carry on like this to there, to there. Okay, so you can see how the commodity currencies are following the commodity cycles. This one I'm actually going to just go all the way down here. So on an absolute basis, there. I have left out obviously some movements in between, but by and large, you get the idea. Okay, then what happens is we get a kick up here. Here it gets a bit skewed, and I would suggest this is because of lockdown. Just the pandemic period maybe skews. So the commodities move up. Commodity currencies, because there's a whole lot of monetary easing going on, probably gets a bit of a skew there, but then it still tends to follow the cycle, albeit with a lag or a lead. Okay, but the idea is I want to show you that the commodity currencies are tracking the commodity cycle. Now take a look at the commodity cycle over here. It's starting to kick up. Okay. So I think that it's worth taking note. If we go now to market scope, if we go through to market scope, take a look at copper, or just take a look at some of the individual commodities. So here, this is a weekly chart of copper. We can put in trough, peak, could put in a higher trough, and here's the higher peak. So it looks like copper is starting to kick up. You can see that it's moved above its 30-week exponential moving average. You can see that that exponential moving average is also starting to kick up, isn't it? So over here, starting to kick up. And take a look at the RSI. RSI starting to pop above 50. Let's just take a look at oil. We'll use Brent over here. All right, so the way that I see this, here's the reference trough, here's the reference peak, here's the higher trough, and now it looks as if we're moving towards the higher peak to get the beginning of the uptrend. We're above that 30-week exponential moving average. Exponential moving average has turned up, and the RSI is above 50. Okay, so we've looked at copper, we've looked at oil, all contributing to that commodity cycle. One more just to look at, let's just take a look at wheat. The CRB index is heavily weighted towards energy and agriculture. This is a bit of a tough one. Let's put in our peaks and troughs to try and make it a bit more simple. So you've got the reference trough. Here's your reference peak. Okay, then you've got the higher trough here, and you've got a higher peak here. So even wheat showing signs of uptrend. It has, just over the last 2 weeks, it has been beaten back quite a bit. So we just want to see if we can get the next higher trough in somewhere here. Okay. Now let's just put this on one side of the analysis. We've looked at all the commodities, okay, and the commodities seem to be showing some signs of life. Well, if the commodities are showing some signs of life, let's take a look at it at the next column, which would be the US dollar. So we go now through to our US dollar. And what's interesting here is on a weekly basis, the US dollar showing lower peak, lower trough. What we can do is we can move this line to this candle, because the candle, let me use an arrow here just so I'm not losing anyone. This candle has the highest high, and what we need to do is we just need to see the candle to the right of it. So really next week's candle, to see if we get some sort of reference candle reversal here. And then we potentially get the next lower peak in. So what we're looking for is some sort of resistance for US dollar, perhaps the 30-week exponential moving average. And then I wonder if we combine that with the commodities analysis, if we can glean something off of the commodity currencies. Now, we looked at the commodity currencies yesterday. They do seem to be moving laterally, but I think we might be at the early stages of a potential cycle low here, because we can see that the Thomson Reuters CRB index is starting to lift off. So again, let's just keep an eye on. At the moment, there is a lot of movement to the side. Let's just keep an eye on if there is some sort of development, okay, in terms of If the commodity cycle is pushing up and the dollar's pushing down, I would expect support to come in at some stage. I don't see it at the moment, but I just want to keep an eye open for it. If we take a look at the loonie, US dollar loonie, if the US dollar is coming down, if commodities are starting to push up, I would expect the US dollar Canadian to be moving in that southeasterly direction. In other words, US dollar depreciating versus the Canadian dollar. So the loonie pairing got more of a trend here, something that I think is more workable than the Aussie. Aussie at the moment is just moving that laterally, and Kim asked last week, I beg your pardon, asked yesterday, what do we do with instruments moving laterally? And I think, well, we should defer to the ones that are trending. So yesterday, loonie potentially showing some sort of trend here, and what we would need to do is keep an eye on a drop into zone 3. So again, I think this is a time we start monitoring the commodity currencies. I don't see anything sort of as a screaming signal at the moment, but I just want to keep an eye on these. All right, back to US dollar. Now, what we saw with the US dollar is that we do have the potential reference candle coming in, but there is no doubt that on a daily basis, it's making inroads. Okay, so this 1, 2, 2, 3 pattern, well, it hasn't quite completed. I'm just putting up a 76.4% here. So we're getting a deep pullback on the daily. This is very interesting. The dollar showing some signs of strength here regardless. Okay. What I think may be happening here, and we did warn of this last week, is that whilst the primary trend of the greenback does seem to be biased to the downside, there does seem to be some flows into the US dollar potentially as a safe haven. So what we can do is we can just see if there is some sort of pressure on, say, NASDAQ, S&P 500, to see if there's some sort of rotation of capital. And you can see that in terms of the NASDAQ, it has made that lower peak. So potentially some movement out of NASDAQ, finding its way into the safe haven dollar. I would expect it to be temporary, and it's not surprising that the US dollar is just finding sort of a ceiling. What we've been pointing out for quite some time is the fact that we do have an overbought condition, and this overbought condition is actually getting quite extended. It's very unusual for the RSI to remain extended in an overbought or oversold position. So one would expect some sort of normalization here. And I think the fact that we're seeing some sort of lower peak coming in on the NASDAQ, at the same time we're getting some sort of movement up on the US dollar, I think we're getting some sort of rotation of capital out of risk into safety. I don't think that is a permanent. I don't think that's a permanent phenomenon. I mean, it remains to be seen, of course. But what I think is happening is that there's profits that are potentially being banked. We've got some earnings coming out, some big tech earnings this week. We'll see if that drives any of the flows. But it does seem that there are some nerves that are coming in just on this overbought condition, and we're seeing that the dollar is a beneficiary there. If you go through to the S&P 500, you'll see something similar. I'll just bring up the S&P 500. Okay, go through to the RSI. You see it's overbought, and again, I think that there is certainly a sense to me of excess here. We can put in 3 trend lines. Okay, 3 trend lines generally suggests overbought. Well, that's what we're seeing in the RSI. If we go down to the daily chart here, perhaps just some sort of resistance area over here. And if we're getting some sort of resistance area here, maybe market participants starting to feel a little bit edgy and shifting some of the capital back into safety. Well, what's safety? Safety is the greenback, the US dollar. All right. If there is movement in the US dollar and it's pushing into zone 1, all right, let's just see what's happening on the currencies. Let's go through to the euro. All right, so euro, I think feeling the rotation of the money back into the dollar. I'm going to keep this line over here. I'm going to keep it over here. I think this is the reference candle to keep an eye on, just to see if we do get that kick up. All right, but certainly putting back as the US dollar showing its corrective movement as well. Let's take a look at cable. All right, and I'll take this out. Cable, I think similar type of analysis as to the euro. It's feeding the dollar strength and it's pulling back as well. We'll keep the reference candle over here for now. Okay. The overbought conditions on the S&P 500 and the overbought conditions on the Nasdaq 100, I think until there's some sort of normalization there, that could be a tailwind for the dollar. Okay, we'll see if it's going to play out that sort of analysis. All right, let's take a look at just 2 more: gold and DAX. All right, so what's interesting is that gold not pulling back quite as much as the euro and the pound, but it has pulled back nevertheless and just kind of moving sideways at the moment. Go back to the US dollar. If we want to see any movement in gold, euro, pound, in terms of their primary trends, there'd have to be some sort of movement down in the dollar here. Again, we want to see if there is any sort of rotation of capital that's a tailwind for the dollar. Very last one for today, we're going to go through to DAX. And the DAX movement here, showing a reference candle reversal. Candle 2 here is the reference candle. Candle 5 completes the reference candle. We're now challenging all-time highs. 16,400 and thereabouts is a resistance area. Go down to the daily chart. We are in zone 1, okay, with some red. So potentially a pullback here to S1. So I think what we can do is we can just keep an eye on the S1 level and see if the S1 level shows some signs of demand. And we would measure that by a cross in the exponential moving average. The exponential moving average needs to cross up. The stochastic needs to cross up, and then it needs to move through to the upper quintile. Just watch out. If we don't move out of the 20 area here, then the DAX is getting set for a sell down. Okay, so this is quite dangerous. We need to see if the support comes in at the S1. Okay, if support comes in at the S1, then we potentially get the crossovers and the movement through to the upper quintile. All right, we'll go as Kim saying, I'm not sure why we look at the DAX. The DAX is one of our most popular instruments, Kim. It's one of our most popular instruments. So there would be a fair few people that are interested in DAX. Okay, so you can see it's just gone cash open now. It's gone through to S1. It looks as if there is some sort of demand coming in. We just got to be patient there, see if we get a crossover in the exponential moving average, see if we get a crossover in the stochastic. Okay. All right, guys, let's wrap up here. And what we shall do is we'll meet again tomorrow. Tomorrow we'll do a crypto minute as well. Have a good day ahead and a good evening. I shall chat with you tomorrow morning. Thanks very much, guys.